Man, another week, another episode here on episode 58 of the Block podcast, the best podcast in the world for all things Web3. Here we break down the technology, what's going on in the market, and the ways in which you can benefit. I am NFT and Jai. I'm here with another weekly edition of the podcast. But before we get started, we must have our weekly disclaimer because while the talk may be different, the disclaimer never changes, which is this podcast is for informational purposes only. In no event are we liable if you lose your cheese, cheddar, mozzarella, or provolone. That is on you. Please consult a financial advisor or any other financial professional advisor when it comes to making decisions with your money. And with that, let's start the show. Man, happy to be back here with y'all this week for Block to Block. Last week was an extremely busy week. Very, very busy. So, a couple of things. I mentioned how I was going out to Baltimore to do a pitch competition. And so, for context, for the Timbuktu platform, we've been doing a business accelerator with Venture for America, which is an organization I actually met Web3 Wayne, or otherwise known as Derek, through this really dope experience where we was at a boot camp for a month in Detroit, and we was just with a group of recent college graduates and early year professionals who are interested in starting companies, individuals who wanted to find ways to make an impact through entrepreneurship. And so for us, we was able to have these conversations, which led to the inception of our company. And so, VFA, they had a 3-month business accelerator focused on like helping you meet your business outcomes. And so for us with Timbuktu, it's just like a great experience just to like really work on our story, to really find critical ways in which we can impact the brand. And so last week, I was actually in a couple of tech competitions, right? I did one in Philadelphia last Wednesday, which was like really great. So shout out to the whole Philadelphia ecosystem. They had a pitch competition for Black professionals and founders in tech. And so I was in a group with just many, many dope individuals who had ventures in biotech and consumer products and how do you say experiences and fashion and all types of companies. And so that was an amazing experience. And I was able to like pitch again last Friday for Venture for America in Baltimore. So I had to do a bunch of traveling between PA and Maryland, but it was all great. It was a great experience in terms of just being on big stages where you can like tell your story, which is like really dope because I felt like I was a musician. They was miking me up with my lapels. You know what I'm saying? I felt like I was Usher. I had the crowd eating out the palm of my hand. I was like, okay, ooh. But nonetheless, it's a very unique experience to be on stage to tell your story. So shout out to Philly, shout out to Baltimore. Like it was just a great experience overall. And so last week was very, very, very busy and I was a bit tired. But Block to Block will never rest because we have important stories to tell. So wanted to get that out the way. Another thing I wanted to mention was you may have heard like references to Art Basel, right? But we want to just take a moment to really speak about what we plan on doing. On December the 9th in Miami for Art Basel weekend, we will be having a immersive experience with a group of artists down in Miami. And what that looks like is we'll be working with close to a dozen artists to really have an immersive, interactive, and gamified experience where you'll be able to see different parts of the city of Miami, get to see different businesses and establishments and patronize them, patronize the artists that we're bringing down, and to attend a mixer. It's still a bit early in terms of what we want to release to you all, but there's a lot of great work happening in the background. So shout out to the entire team that's diligently working on our Art Basel project. Can't wait to get that going for y'all. It's gonna be a fire one. So yeah, man, that's really been it in terms of the whole Timbuktu experience, right? Like the business side of the house. But with that, what we want to get to is just speaking about just what's happening in the market of Web3. And so, with that, also another key thing I forgot to mention, we had to reschedule our guest appearance that was supposed to be for today, but that's still going to be happening. So, shout out to our upcoming guests. But nonetheless, on with the story. So today we had some breaking news that occurred actually yesterday with JP Morgan. You heard it. The biggest, really like the biggest bank in the United States or in the world, major US bank has introduced their new system called the Tokenized Collateral Network or TCN, which is their system that uses blockchain technology to make financial transactions more efficient and secure. And they recently tested this out live with BlackRock, which we spoke about BlackRock a couple times on the episode on this podcast, which is the largest asset management company or investment firm in the world. And so, yeah, really spicy stuff. Because if you know, like in the past, the CEO of JP Morgan didn't really have a positive stance on like cryptocurrency and other aspects of Web3. However, if you've been following this podcast since the beginning, we've been speaking about like some of the subtle ways in which JP Morgan, the company, actually has been delving into like the world of blockchain and Web3. So there's a lesson in there. You don't always let them know your next move. But nonetheless, so the TCN is an application that allows investors to utilize assets as collateral. And with using the blockchain technology, investors are able to transfer collateral ownership without moving assets in underlying ledgers. So what that essentially means is currently what they're doing with like money market funds, which is a type of investment instrument, they're turning them into like digital tokens, which are being used as securities for the financial deals, right? So they're creating these tokens where you can like essentially trade these assets much more efficiently and effectively, right? So instead of like longer transaction times or costs, like through the blockchain technology, a lot of these things can happen kind of instantaneously. So like big moves right there. And so in the first trade that actually happened between JP Morgan and BlackRock, TCN turned these money market funds into like the shares of the money market fund into like into digital tokens, and it was able to transfer them over to the Barclays Bank as a security for the over-the-counter derivatives exchange between the two organizations. So the big players are really involved in this whole situation. JP Morgan has been testing out TCN since May of last year, and they decided that now was the time to put this out into the market and launch it for their clients. And so it's really designed just to make these traditional financial settlements much faster and much more secure with blockchain technology. And Tyrone Loban, who works at JP Morgan, states that this new system makes it easier to use capital as collateral in transactions, making things more efficient. It also lets people move collateral quickly, which was very difficult before. And so going back to what we often speak about on the podcast of you want to use technology, not just for technology's sake, but for the sake of making an impact, right? And that's what's really happening here. With these larger institutions, oftentimes they're literally managing not just millions, but billions of dollars worth of capital each and every day. And we all know like people always want access to their money much quicker, and much faster, and much more cost friendly. And if you're able to do so with blockchain technology, which is just really the better management of data in a more secure manner, in a manner that is transparent, then why not do so, right? And so, once again, it just goes back to as we are listening to this podcast and we're hearing about these moves that these organizations are making, yes, be excited for the technology. And yes, be imaginative, be creative. However, don't fall into the trap of just thinking that technology itself is enough. The technology has to solve a pain point. So, yeah, going back to the story, it just gives clients easier access to money during the day, which is very important for financial transactions. And JP Morgan is becoming more involved in just like blockchain and cryptocurrency services in general. And, you know, we was able to see this with like the recent release of the TCN. And they're just starting off with money market funds right now, but who knows what other investment instruments this may really roll out into. And so one thing that's important to note is just what will be the long-term impact to the financial services industry, right? I would say there's this one thing called the first movers effect, where you oftentimes when you see innovations that happen with like technologies we never seen before, you have that first mover or the first one who's able to like really make a splash in the market. So for example, when it comes to like Uber, right? Uber is a technology company where you're able to just request a driver to like come pick you up in a car and take you to a destination. Prior to the existence of Uber, this was like a very strange concept, right? Like you might have seen like different iterations of this in like smaller communities, but on a large scale, there was like no such thing like that. It was more so like taxi services. But Uber was able to like come into the market and really dominate from like the rideshare capacity. And because they were the first mover, other companies have started to come out. So like a Lyft, which is like the probably the number one competitor to Uber. Like Lyft became popular. And if you go to different markets, like in Latin America, there's like very similar models. And not just for rideshare, but like just the concept of like renting out services that you own, like your car, like Airbnb is basically that Uber model, which has made a big impact in like the hospitality industry or hotel industry. So going back to this, JP Morgan is like, from what we know, the first mover of this blockchain based system to like essentially better manage and move assets. However, we can see is very likely, not even likely, what's going to happen is these other players, like these other large institutions, like a Bank of America, for example, are probably going to be launching their own iterations or their own versions of these systems. Because you don't want to just have your competitor have a huge edge over you with like these technologies. You're going to be coming out with your own version of the same technology or even different types of technologies that can do the same types of things. And so don't be surprised within the next 1 to 2 years, we see like a new trend of these giant institutions roll out these blockchain technologies. I mean, in fact, even a couple of weeks ago, right, there was a story about how the London Stock Exchange was finding a way to use blockchain technology so they can better move assets onto the within their platform as well. So this is happening on a global level with the biggest of institutions. Because if you do know something about financial services, the movement of money and capital is actually a very hard thing to do, right? Especially if whether you have experience sending funds to family members across the seas in like different countries, or just like simply moving or wiring like a check from one bank to another. It's like a longer process and it costs money, yo. So this is actually very exciting and it's very important because we're going to really see trends from like the larger macro economy. So once again, don't fall for the cap of, oh, blockchain technology. That man, blockchain is not important. It's going to go away. You're blinding yourselves if you have this mentality. And as I mentioned earlier in the podcast episode, don't let them know your next move. Like JP Morgan was like a big opponent of like crypto specifically, right? But look at what happened. Like while externally to us, they were saying, we don't think it's really viable. There's like no real use case. They took the time and the resources to truly understand the underlying technology of blockchain and found ways to like create a product around it or offering around it. And they're rolling it out right now. So don't play yourselves, y'all. It's very important for all of us to really educate ourselves. And that's the story that I want to bring today with this JP Morgan story. The Tokenized Collateral Network, or TCN, is powered by the blockchain. And with that, I like to conclude today's episode of the Block to Block podcast, the best podcast in the world for all things Web3. Please tune in. We're gonna on the back end, we're gonna like reschedule with like our next guest because she has like a fantastic story when it comes to the world of crypto. And yeah, man. Also, make sure you like, comment, subscribe, and share with your loved ones. Stop hoarding this information for yourself. Don't be selfish, y'all. We're all about the community here. And with that, peace.